Good morning to all of you. Nice to see so many of you interested in this. I just wanted to give you a little bit of data about Chennai Angels for those of you who didn't know what it's all about. The total investments we made is in 84 companies, aggregating to 160 crores. Active investments as on date is with 57 companies. That means others we have exited, in some form, partly or fully. 25 companies gave us more than a 2.7x return. 15 companies did not do well, so we had to get out of that. Sector-wise split, we are actually sector agnostic. We don't say we will do only with this sector, nor geography in that sense. We've also funded companies which are in the north and other parts of India. Enterprise and SaaS 30%, consumer 30%, EdTech 14%, FinTech 7%, sustainability 7%, and others 12 to 14%. Sustainability includes agri-tech, clean tech, and water management. So we've got very focused groups for these as well as EV sector, apart from the overall group which is evaluating the various deals. Others include medtech, gaming, B2B, etc. So this is broadly where Chennai Angels is. When did we start? Which year?
It started in 2007.
2007, but I think in the last 5 years probably it has picked up more momentum than it ever has in the past. Both of us are investors in various startups, and we also mentor some of the companies. We are also involved in evaluation of deals as part of the deal sourcing committee which we have. So this is how maybe I can a little bit explain the process initially, then Manu can add. We have, like anybody, any of you want to, seek funding from Chennai Angels, then you make the pitch or you inform the Chennai Angels people, Darshan or anybody else in Chennai Angels. We have a secretariat with the CEO and analysts and some 8-9 people. You send the proposal to them and they will have a chat with you. We have a very structured, checklist to say on various questions, whether it should be in or whether it is worth considering further. After they have a lot of dialogue, they pass it on to what we call as a deal sourcing committee. This is the first level of screening of investors. Before that, the secretariat does it. We are in the deal sourcing committee. There are some 40 people, but at least 10 or 15 will attend depending on their interest and time availability. After the deal sourcing committee goes through this, where typically you make a presentation for an hour or so, a presentation of 15-20 minutes, balance question and answer session, where you talk about your company. Again, there is a structure to it in terms of what is the idea you are looking at, and or what's the problem you are trying to solve, what is the market potential, what do you see as the revenue potential, and how are you going about it, and what is the work you have done till now to prove the concept, right? It has to work. So after that, the deal sourcing committee will go through this, and if the deal sourcing committee is reasonably satisfied that it's a worthwhile proposition, because there will be some more detailing in terms of due diligence or even digging into more details. Some people may not be able to get everything in 40 minutes or 1 hour. So if the deal sourcing committee feels it's worth being considered by the larger group, which is the Chennai Angels, now it's what, 170 people we have?
Yeah, 140.
140 people. Some of them may attend online, but normally we have 30-40 people attending every time, depending on their interest. And then they vote for it, and then we pitch for how much is the money, who is willing to give, and all that. Broadly, this is the process we follow. So you can take on from there.
Sure. Hi, morning. So I have a quick question. So how many of you know where Chennai Angels sits? Does everyone know where they sit? Okay. So Chennai Angels sits here inside Research Park, just as a matter of sharing a piece of information. So the idea behind this session was just to talk a little bit about TCA and then maybe get into specific questions that you might have about funding itself. So TCA sits right here. Unfortunately, for whatever reason, I don't think we have been as active as a group. TCA as a group has not been active inside IIT Madras. I personally have, I think, 7-8 investments in this ecosystem. But the idea is that how do we connect, the broader IIT Madras, Research Park, and IC ecosystem to TCA, right? And see, today, as you look at it, I think the last 2.5-3 years post-COVID, right, has been the best time to raise money, right, ever. across, different sources, across grants, across loans, and, different people in the market who are willing to fund ideas, and, the risk taking interest from people, from funds, from individuals, from HNIs is through the roof, right? So now the difference comes, okay, when you have 10 different sources to, raise money from, then you want to now take a look and be a little bit more discerning as to what qualifies that money, right? What is the difference between money coming from A, B, and, Z, right? And I think that is where, I would want to pitch, the idea of Chennai Angels, right? So Chennai Angels, I think, is a group of, well-meaning investors. I think largely people, HNIs, people who have been in the business, people who have retired and are looking to offer back into the ecosystem, the startup ecosystem. And while it has a very glaring Chennai in the name, it is definitely not constrained to Chennai in any way. It is they have investments across the board, and so just coming back to the idea of you can raise money from multiple places. What makes Chennai Angels different? And that is where it is money that comes with a well-meaning intent, right? Today you can raise money without going into specific names. Money is very expensive in some way or the other, right? People who are overly eager to fund you, right, there's always a catch. There's always something that is, there's an asterisk somewhere there saying, I want something else in return, I'll, give you some, valuation, which the market is not offering, right? If that is the case, you need to question why, 90 people are not offering me that valuation. One guy comes and says, I'll offer you that valuation. I mean, there is something to it, right? End of the day, there is no free lunch, right? And so the distinction I'm trying to make is that there is a difference between people who come in and act like a banker, right? They're offering, even though they are under the guise of an angel network or, guise of, somebody who is willing to support the ecosystem. There is a difference between that and, an entity like TCA, and there are others also, there are similar such networks who are working on one side, right? Where, the bread is not buttered on both sides, so to say, right? And so I think it is important as people who are, out in the market, who are going to raise money, to be aware of what is the difference, what are the different shades of money that are available in the market, and, how do I distinguish between that and, this, right? And so, coming back to TCA specifically, it's a group of 150 odd people, largely from Chennai, but now quite, I think, grown quite a bit across the ecosystem. And it's people who are well-meaning, who are willing to sit, mentor, who are willing to put in that effort. Ramkumar, myself, there are multiple others who work very closely with the startups pre and post. I think a lot of the investments that have come through are, it's spending the time with the startup, helping them, mentoring them, working with them, taking them to different fundraising opportunities. So the core differentiation I'm trying to talk about here is, that it's people who are there in it with you at the same level. There is no differentiation between, the investor and the investee from that angle, right? And so that makes a big difference today. As somebody who has, seen this ecosystem grow, I think the last 5-6 years, and having been a student, I've literally seen this building being put up, when I was in IIT Madras. And so for me, it's sometimes like, why as a person who's a member of TCA, why aren't we more, doing more to invest here? And, that was the genesis of the conversation with Darshan, and then I think he took it up with the IC team, and, here we are. So I will leave it at that, and then, we'll just throw it open, let's have a conversation, let's, happy to know what you guys are up to, and, let's have a conversation, like open conversation.
One small request. Anyone who wants to speak, please use the mic. Feel free to ask any questions, please.
So my question is to you.
Please introduce yourself,
Yeah.
your name and your business.
Yeah.
Will be useful for us.
Yeah, my name is Kashi Shankar. I'm from Incubation Research Lab, and we are into the image-based diagnosis in health tech. So we just started, and we have the MVP ready, and next step is getting into clinical trial and everything. So that's where we stand right now. It's a very small team. And so my question to you, like two questions. One is how long it takes, like end to end, starting from the pitching session until I get the money if everything goes good. How long typically it takes? That is what.
See, typically it is the preparedness of the entrepreneur in terms of the data, right?
Yeah.
I think you can do it as quickly as 3 months
3 months.
or 6 months. Normally you can say, because a lot of
You mean
I'm not
from
trying-
starting to pitch to TCA or
Yeah.
should be shorter? I mean, I would say 3 months would be the outer limit. Yeah. If everything is ready per se, I think it should be 3 months.
See, many times you see startups don't have an appreciation of the legal and other things, which I don't blame them at all. That's not your main role. That's where it takes time. Small little things, certificate of incorporation of the company, some registration somewhere, these kind of things. So if they're reasonably done, I think we have done this.
This is end to end, from
Yeah.
pitch to
Yeah.
money and.
Yeah, we've done it even less than 3 months
Less than
also
3
in
months.
some
The
cases.
due diligence sometimes.
Everything can be done parallelly.
Parallel.
See, you make the pitch, final pitch, the next day itself due diligence can start. There is no delay at all. If you are, many times people are not able to sit and give the information because they are busy with the business, right? So which one you?
Okay, second question is like, out of so many good investments, you exited from like 14 or 16 of them. And how long you stayed there until you see the red flags and you exited, right? So anything you share with us that would help us so that we can address,
Manu is more experienced.
address those kind
than
of
more-
red flags at the stage, it's a early stage, right?
Right.
So it's kind of lessons learned without going through the pain.
Sure. So how long is, it's really, there is no, one answer that fits all, right? The average, see, the life cycle of a VC fund, let's take that, right? The life cycle of a fund is, 7 plus 1, 7 plus 1 plus 1, today they're doing 8 plus 1, Today, I think in the US, the model is, we have started doing rolling funds also, where there is no timeline, right? So generally, that would be the constraint, because see, an angel network will invest. Then there has to be someone who comes in and does a Series A. There has to be someone who comes in and does a Series B, right? So there has to be a rolling, fundraise that happens. So on an average, an angel network, let's say, will stay invested between 3 to 5 years, on an average, right? Very high level. Again, there will always be, outliers in this. There will always be, there have been investments where I have exited in, 8-9 months, right? And, I've had to face like capital gains and things like that, And there have been investments, where the company still continues to chug along, even though there is no meaningful, end visible. Company, continues to chug along, at a.
Typically it boils down to the revenue they make and everything.
No, why? I mean, doesn't have to. I mean, there are companies that have gone 5 years, 6 years. There's been no revenue, and they've raised a lot of money,
also.
right? So there is no one size fits all answer to that. But on an average, an angel network will see, the idea of an angel network is kind of take you, help you to kind of put process in place, put structure in place, maybe help you with hiring, given the background of people, right? There are, the doyens of industry who are members, so to say, right? There are people, 40 years of experience in the industry, TI cycle. So people who can come in and, people who are going into that segment, you can attach someone of his caliber to it and say, okay, I will now help you, in a particular idea or a particular industry, somebody into, and so there are people in each of these categories, who work and who are quite active and who, contribute in their areas, so to say. And so the idea is you come in, help put process, help maybe hire a few people, refer people from industry, refer people from their background. Because as a startup, as like you said, you have a small team of 5-6 people, maybe less than 10. Right now, when you get from 10 to 20, it is like a big step. When you get from 20 to 50, it's a whole different ball game. Once you get past the hundreds, you will not know the name of the person sitting next to you, the guy walking across from you, your guy you are having lunch with, right? So while there isn't a particular answer to that, I would generally say a angel network will stay ideally 3 years. The idea is that, see, as an angel investor, I'll give you the other perspective, right? You always want to stick with, giving you the perspective from my side, right? I will want to stick with you let your winning horses run, right? The idea is never to, take an exit and leave after 3 years as an angel investor, right? The majority of time when an angel investor will exit is when the startup comes and tells me, hey, I want you to exit because, I have a, big fund, a Tiger or a Sequoia or somebody is coming and they want to, see, when they come in, all of them have requirements. They'll say, I want, usually 25%, right? They'll say between 20 and 25%, they'll say, I want to enter with, right? So when they are coming and saying, I want 20%, I want 25% of your company, you now have to think about dilution, right? And the way to adjust for that dilution is to say, okay, I'll give secondary exits, right? So the guys who came, who are your first investors, you say, okay, you've maybe seen a 7x or 8x from, when you gave me money, are you interested in exiting? Right? And that's a very sensitive point, right? Asking your investor to exit, I've been, it's the way you ask it makes a big difference, right? And I don't know if Jay has that, even IIT Madras has been asked to exit.
It's like saying, will you be kind enough to consider or to say get lost?
Get lost. and unfortunately, both, I've seen
the
both.
difference between these two.
Right? I've seen both sides, Guy will come to me and say, I want you out. I'm like, I won't. I mean, and see, at the end of the day, there is, and again, I'm not giving you ideas here, right? But there is not much I can do, right? If you say leave, right? He'll say, sir, if you don't leave, my company will collapse. Right? Do you want me to take Sequoia and do you want a 7x or do you want 0? Right? Right. So, and a lot of times, unfortunately, that is the reality, right? Because the large funds come in, they know how to squeeze. They know how to, say, okay, I want you, you go and clean up your cap table and you come to me. Okay, you clear out all these people, call them whatever, you might be your closest mentor, you might be, and I've seen that happen very actively, right? People who have mentored and seen this company kind of from 0 to, 20 are being asked to exit, at the stage when you're going from 20 to 100, right? They're being saying, okay, leave. And so it's a sensitive, there's a way to manage it. Even, so all of you are incubated, I assume, in RTBI and HTIC and all that, right? So IIT Madras has been asked to exit. I've seen where incubation cell, you go to Professor Ashok and say, hey, sir, I need you out. I've seen companies do that, right? In sometimes it is, portrayed in a positive way, right? I think Medibuddy came with a big check and, handed it off. I don't know if you guys were there at the book launch, right? There was the IIT Madras entrepreneur book launch, right? Medibuddy came and gave like a 13 crore check to Prof or 15 crore check to Prof and said, this is an exit, right? In other cases where I've been involved also, they're like, sir, if you don't do it, you have to take, because IIT Madras, at least IC is it's not commercial in the sense of the word that other people are, right? A VC or an angel network are. It's still, there is that flexibility, right? I'm still doing it for the startup, right? An incubator or IC. So a lot of times that is a consideration, because there is always the trade-off between the founder owning enough equity at your Series A and Series B, right? How much equity does the founder own at that point? Do you have enough skin in the game for a Series A investor? Do you have enough skin in the game for a Series B investor to come in, right? When they are coming in, they are putting in 5 million, 10 million, 25 million, right? They are not going to put in $25 million if, you are thinking, hey, this guy is going to disappear tomorrow, right? So skin in the game is super important.
So one more thing I just wanted to add to this thing about angel investing, especially how we operate in Chennai Angels. Manu explained a little bit. We have people with varied backgrounds, right? Be it digital, consumer, or anything you talk about. So whoever gets funded by us gets adopted, you can say, actually. See, the motive is also to make money. The difference he said about between VCs and angel investor is, angel investor very desperately wants you to succeed. I think that's a very great opportunity for all the people who are getting funded. And you would see that I've been here for maybe 2 years as part of the Chennai Angels. I've seen the enthusiasm of people. Nobody asked the question, why should I help? And all of them are, like you said, very accomplished and very knowledgeable in their. We have to just pick up a phone and tell them, so-and-so needs. Many times market opportunities come in. That's the most important thing. If you go and stand in front of a company, or big companies and all that, they would ask you why. Now, we've been able to open doors where they get the first presentation done. And they never know these companies exist, nor these guys can ever reach them. Similarly, we talk about, any other kind of help, like you said, mentoring, putting things in place, or you want to do something about, how to organize your sales, production, all that we are doing. So that's the major difference. In fact, not that this is the policy, or I would like to say, the longer they stay, they take more interest in you. It's like their own bots, So they want them to grow and then they would leave. This is the advantage you have with angel investing. Chennai Angels definitely. I found there are two things I wanted to tell you. Whether you ask or not, I worked with two of the projects here. One for a very long time, Earth Focus, who is now getting funded in Chennai Angels. The other one was little less. Maybe the one was 3 years, the other one is 1.5 years, where they make electric vehicle charger, Meras. It's here. What I found is the articulation of these people as to what is the business idea takes a lot of time. Okay, initially obviously you get very excited with your technical idea. So that is where I think, I don't know what kind of training is given. I think Ramkumar is doing something to help people
GDC.
to figure out how exactly, you should look at a business idea. That's one thing which people have to do. Because some cases people are just saying it's a great idea, but they have no idea about where the market is and how exactly it is to be done. Second is, they're also not much aware of what we are talking about, the angel investing group, which can help you in a very big way. It's very difficult for you to go from door to door and sell any product at all, right? You have only that much money and resources. So these two things, I think all the incubators health should look at. At some stage, like you said, some of us have been involved even before it came for funding. Maybe we knew it, so we brought them for funding also. At that time, when we got involved, I didn't know how far these guys will get in, Like some of them asked some very basic questions. Should we go this way, that way, even people hiring and marketing and branding and all those kind of things. So we give them that guidance, and then when they reach a particular stage, then I think it's worth looking at. So it's a kind of a graduation for you. If any of the angel investors has said that I'll take a look at you, that means you're meeting some criteria, then you get into a business mode. So important thing is to think of the business idea which will help you and others to make money. I think that's one thing is very important before you go for any funding.
Myself, Vandan, from Camper Direction.
What is the product you do?
Camper van.
We are manufacturing campers, caravans. We are producing caravans with the OEM.
Okay.
So my question is at what stage do you actually take up funding? I'm sure I was able to understand that only when the traction happens, when a company is into revenues, okay, at X many years of traction, then you set in you seed funding, right? So is there any specific reason why you don't do seed fundings? Because most of the companies here in this incubation setup is where during the initial pre-revenue stage. Probably that's the reason why you didn't have any people coming to you in that sense.
Yeah. Good question. Manu.
But there are, the little time that I spent here, I see a lot of companies with tremendous potential and ideas, which could be socially very vital and important if they succeed. And many of them struggle with their initial fundings or directions. A proper means, okay? Whereas maybe with the kind of experience that you have, if you can just start doing at this level, maybe a small seed to some of them to ensure they see the light of their day, that can have a great impact.
Sure. See, a couple of things there to, just specifically address what you're saying. I don't think there is a cutoff in saying, hey, there needs to be this traction, there needs to be that traction, and Darshan can chime in at some point. There isn't a hard cutoff in any way, okay? A lot of times, again, and see, this is very subjective, right? There is with any of what I'm saying, there is a average path to it. There are always, outliers on both sides that, that will exist, right? There is no cutoff that says, hey, you need to come with revenue and you need to come with traction and all that, right? It is nice if you have it. It is easier to sell the story if you have it. But I think it is about the entrepreneur selling the story, right? The other side of it, what I'll tell you is, there is a reason it's better not to raise money when you're an idea, right? Because you cannot control for dilution, right? I've seen startups, I was at IIT Delhi, 20-30 days ago. I've seen startups which have raised money at like a 1.5 crore valuation, right? 2 crore valuation. Today, fantastic companies, right? But even before he has come to Series A, he has lost like 60% of the company, right? So today there are very low hanging places to go get money for your seed, right? Go to your friends and family, go to that first stage, that first 50 lakhs today you can raise in multiple places. Grants, there are grants everywhere. IC will give you loans, so that first 50-60 lakhs, I think you should today not come to an angel network for, right? Even if we can do it, let's say there is this ability for us to do it, right? And I'm sure individually people will come and do it, right? Even before, let's say, the broader group is not ready, the membership people who are working with this network will come and, maybe fund 30, 40, 50 lakhs at the stage that you're talking about. But I think it's not necessary for you today. Today there are very low hanging grants that are available in the market. Loans that are available.
Government has given, right?
Government has given.
Tamil Nadu government has given. I think central government is giving something. Depending on where you're working. I think there are some specific things for EVs and that kind of sector-wise also. But generally, I can tell you a broad thing is that there must be a proof of concept. See, the idea is brilliant. Will it work? Now, if you don't say that, like one thing is what Manu said, that you might have killed the goose which lays the golden egg even before, by taking 1.5 crores, 2 crore and 5 crore valuation. That's one. But the angel networks also, they have no way of judging whether your product works or concept, whatever, service, product. So you will have to say, maybe revenue is not much, that's okay. But it hits, everybody says, yeah, this seems a brilliant idea, it will work. We can do some quick study or something like that. So that's, I think, from an incubator point of view, that's also my view is, as you start with an idea in the incubator cell with all the support you get, the first goal for you should be to say that I'll prove that this works, right? Which is not only on the laboratory, but also wherever it involves trials outside, clinical trials, whatever the kind of trials. Then I think you're getting ready to do business. Otherwise, it becomes very difficult for you to explain, and then all these valuation and other issues would come in.
And the question there is, can the startup be associated with you, not just for funding? Okay. Maybe they are not up there for the funding stage, but then they can use your network, get guidance.
You can.
Maybe you get a better.
No, and you should. I think if you reach out via the secretariat and separately as well, people are always happy to engage, like he said.
I have an answer for this because the mentors of IITM incubator projects are supposed to do this according to me, right? Because when I came here for this Earth Focus or other companies, they were not ready to say how much revenue they will make or whether the product will work at all. In fact, I'll tell you what I did in particular case. This guy is making something to save water, right? So first thing I did was, I know somebody who is very much involved in water management at the national level and makes policies and all that, and very interested in this. He's already trying various things at his home. He's a good engineer. So he gave this guy gave the Arun Subramaniam who's here. He gave the samples to him first. Ranganath was in Grand First. I told him he is interested. He said, I will try it out. He did such great analysis, and then he even told him what kind of things he should change. He changed and then gave it to him. That's one side we did. Second is, obviously this goes with taps. So we know companies like Parry and Roca and all those guys who make these taps. So I took him to the marketing and CEO of that company saying, will you buy this product? So they actually tried it, and then they said, we'll buy the product. Only thing they said, if you come to us, we'll kill you, because OEMs will keep on dropping the price. Don't do that. That guy himself said, if you want to come, we'll give you huge volume, but you can't make money. So I'm saying some of this is the guidance which he would have not been able to do. And at that time when he wanted to raise money, in fact, I didn't want to recommend it to Chennai Angels. There's somebody individually interested in this. because I was asking him what is the regular revenue you're going to show, right? Everywhere the person goes, he is able to get the business. But next year I will do so much. Then over a period of time we tried, in between we also helped him to clean up, and he knows how to make the P&L, how to interpret, how to make the cash flow, and what is the margin, gross, all those things we taught him. And then he's come to a stage where he's able to project, these are the guys who are going to be regular guys who will buy from me. This is the business I can project and all that. So I'm saying there is a kind of mentoring at the incubation stage, which is to help you to make the proof of concept which is saleable, with the revenue, etc., etc. Next comes the investment. Like I said, that stage you need to get the seed funding from various people, or even IIT. Research Park also gives something, in all these companies they've invested. IC has some percentage, 5%, 10%, and some EC loans also, not at a very high rate of interest. So I think that should be used. I'm not sure whether Chennai Angels, everybody will be interested to be the mentor. I think some may be interested, and Darshan can definitely pass it around. See, it also becomes easy for people to send specific proposals, right? There are people they're interested in this particular area, so they think I can contribute and help you to do. This is what we can do still. Yeah.
Hi, this is Raj here. I come from a company called BlueHill Cloud. We have been incubated in IIT for the last 6 months. We are into the space of making autonomous bots, which can actually make food, dispense any of these salads and chat. And our product is just across the food court. So if you have time, you can have a look at it. My question is, what if you don't have a business plan? If you have multiple business plans, how do you kind of address them? Do you think, hey, these people don't know the business? Because in our business, it's not one business model that we have, or one business model that we can think of. There are more. For example, the bots that we have, it can either be purchased outright, or we can go into a model of, let's say, Coco, company-owned, company-operated, where we have our own staff working on it, or it can be a franchisee. And plus, as this is a cloud-based bot, it can be installed anywhere. So within the domains of Chennai, we might have good control, but if we are stepping out of the country, then it's a different business model altogether. So at this point, to be honest, we don't have a business model. We are still evolving to say, can we choose this model, can we choose that model? And what, in your opinion, do you think would be the path, or maybe the guidance that you can say, hey, you should focus on this business model, and maybe the others will come later?
Sure. So there are, I think, a few things in that, and I'll try to answer it at a, I'll go a little bit above, what you are asking, and then maybe you can tell me if that answers. See, I'm yet to come across a company, right, a startup, whose business plan I saw when I invested, and 3 years later, they are on the same business plan, right? They are achieving what they promised, right? They are even doing the same business that they were when I invested, right? Across 30, 40 investments that I have been involved with, right? The thing that I have learned, right, personally, is you're taking a bet on the entrepreneur, right? The entrepreneur who is able to pivot, right? None of these businesses are going to pan out. Today you are working on something, it will not pan out, right? There will always be something, there will be a roadblock that you will run into, you'll be banging your head on this, and then you see just, half a meter on this side you bang and it will open, and you get to run really fast on that, right? And I've seen people do this 3 times, 5 times, the most successful of my investments has done that, right? Today a NASPERS funded company, right? Right here, it's right, in this building, right? So, you have to keep at it, right? Your people are investing at this stage, right? A business plan is only that. It is only a plan, right? It's right there in the name, right? You can only plan and project for that much. You can't, there are so many variables that you can't account for, right? And a lot of these things, see, the most interesting thing that I have seen, that at least, and this is very specific to me, is stuff that you build here in India, but for a broader use case, right? But for the entire world to use, right? Because India, I mean, is not a market that can pay big rent for, a certain product, right? Rent capturing does not happen here. It happens in the West, right? India is a place where you get scale, and you get volumes, but the economics of it don't really work out most of the time, right? So what I would, to your question, I don't think it is a problem that, you have 3 different business plans. I don't think, your core business is that. I think I would focus on what your technology is, what is your differentiation, what is the core tech, right? And that is where, the broader ecosystem, to your point also earlier, right? See, what you need to come with, see, we are as a group, right, TCA and, I think, all the investors here share a fairly similar philosophy in that we're not here to fund ideas that want to take money, burn it, light it on fire, and then, fuel your velocity, right? That is not what we are here for, right? There are other people who will fund that, right? But I think in that sense of the word, we are more conservative, right? There are people who are looking to fund core tech, and I think that gels with the type of people who are here, right? You are all working on technology, you are all working on different aspects of core technology. You're not saying, hey, I want to, burn 3 crores a month, 5 crores a month to, do business. You burn 5 crores and your top line is 10 lakhs, right? Or, top line is 25 lakhs, right? That doesn't gel with us. I'm not saying that's the wrong way to do business. There is a space for that business as well. There is money that can fund that type of business as well. But that is not, this network, right? That is not us. So I don't think it is wrong that you have multiple business plans, as long as you have clarity on how, what is going to happen on each of these different, the 3 different paths that you have for yourself. As long as there is clarity on how each of these 3 are going to be addressed. And then the question comes, okay, sorry, I didn't get your name.
It's Raj.
Does Raj have enough bandwidth to run on all 3, right? Then you have to start articulating that, right? There are 3 different paths. All 3 have, require a good amount of effort. Does Raj have, a team to do that, right? Does Raj have co-founders to do that, right? So that starts other questions that start coming up, in your mind, in the investor's mind. One other thing I'll tell you, right? While every one of us here, at least from an angel network standpoint, is looking to invest, once you start going through the motions of investing, right? You're always looking for something to say, okay, no, right? I'm always on the watch out to see, hey, what is wrong with this story, right? What is the, red flag? Like, you said, what is the red flag to this story, right? And it's not at the business plan stage. It is not, if you do have multiple business plans, okay, please run with it, as long as, you are clear how much of effort it requires to run on all 3, right? And that is where I'm trying to evaluate, okay, does he have that ability, right? Or does he have the ability to delegate on, the other 2, and he will run on the main, the main path, right? And so those are things that, you want to think about. Like the one thing I'll keep repeating with, with our conversations is there is no, right answer, right? You will say, you said this that day, but see these 10 examples where none of which what you said makes sense, right? And unfortunately, I can't, I really can't give you the right answer for that. There's always going to be outliers on the side. We're talking about the mean path, right? So for the majority of people, this is how it works, right? And
Sorry, go ahead.
please go ahead.
So there's one thing I want to talk about, this business plan. See, this is very scary for people who have not done this, right? They say, how do I put a number? How many crores, how many lakhs, how will I sell, and all that. But I think when you want to graduate from an innovator or an idea generator into business, the first thing that is expected is, with what confidence you can say so much can be sold. People are not even expecting, like you said, the business plan made when you're a startup and 3 years later will be totally different. There will be modifications, additions, deletions to product. But can you think like that? If you think like that, then you're an entrepreneur, right? Apart from being a techie or whatever you are. So that is something which you have to learn to, I don't know, there are programs, etc. there to do this. You have to convert, you have to say, yeah, I think I can sell this because there are so many guys. If you say automotive, there are so many cars out of which some 2% will buy this, and then 0.5% of that is equal to this, and that is equal to this. Then I think there is a logic as to why this will work, which all the investors may not know. But you should not be scared of, putting a number there. There must be a logic. Logic is more important than the number per se, is what I think. That transition also everybody has to make if you want to go for funding. Because how do you expect the other person to say, because they don't have any idea about your product. Maybe they know only whatever you present.
And all of you have seen, Shark Tank, right? I'm sure everyone has watched Shark Tank, right? So, see, all you need is for one person to be, bought into your idea, right? You will knock on 100 doors, right? 99 will say no, 99 will tell you you are wrong. 99 will tell you you are going down the wrong path. They will always give you a reason why this is not the way to go. They'll all have gyan. Nobody would have done it themselves, but they'll all have gyan to give you, right? The idea is that one person, all you need to do is to have that perseverance to keep knocking, right? And I've seen how difficult it is, right? You go through cycles of funding. You go through so many different cycles. Again now as we, the broader, story is we are going into a slowdown in funding, right? Things are definitely slowing down. Things are, I can see it, right? People are actually now talking about more meaningful valuations. I'm seeing companies come to me and say, okay, sub 10 crore. I've not seen that in 3.5 years. I've not seen anybody say, opening bid will be 25 crore, right? The first guy comes to me and says, okay, sir, 25 crore, without anything, right? With tissue paper, napkin drawing, will say, sir, 25 crore valuation. So, and see, all of this, right, is a function of liquidity, right? Whether it's public market, private market, valuation is a function of liquidity, right? How much money is there in the ecosystem? How much money is there that is being, that is sloshing around the ecosystem? See, anybody, right? You guys, us, all I can model for is earnings, right? I understand your business, right? And then you put Excel, a sheet around it, you put a DCF around it, and you say, okay, this is how much I will earn 5 years from today. This is how much I'll earn 10 years from today, right? What nobody can model for, save the central bankers, is the multiple on earnings, right? Your P, right? Your, X on your revenues, or X on, EBITDA, no point here, but I'm saying even in the public markets, right? Why is, DMart having, such crazy multiples, right? Why are certain, why is Tesla or the FANG, to give you a concept about liquidity, right? FANG was what? In November 2021, it was, I believe, $11 trillion, right? The FANG was worth. Today, the same thing has lost about $6 trillion has been lost from the FANG valuation, right? Nothing has significantly changed from a macro standpoint for all of these guys. It is that all that liquidity is coming out of that ecosystem. As the central bank says, okay, I want to stop printing money, I want to start tightening, the controls, money is flowing back out, right? Crypto, right? I'm a strong believer in the idea of Web3, right? But, there was so much of exuberance, irrational exuberance, so to say, in the idea of crypto, right? You're selling pictures and, whatnot, right? So there is always that mean path that you have to find which, works for, your funding, your idea, your concept. And the one, piece of, information that I can say is you have to keep knocking. You have to just keep at it, keep doing what you're doing, and keep talking to people. The one thing I think what Ramkumar also alluded to earlier was that the people who are coming with core technology are coming without having the social skills or the ability to, explain what they are doing in a meaningful way. Right? People come and, they say, hey, I have this, I have this table, and what is different, versus the 100 other tables there. While it is different, people are not able to explain, what they have built. What is the core technology here? What makes me different from, all the other products in the market? And people have not developed that. And I think that is the most important, thing that you should have is the people will be more likely, an investor will be more likely to fund a storyteller, unfortunately, than somebody with core technology, right? If you are able to sit and tell me, hey, I'm going to the moon, there are people who are more likely to bite, right? To take a specific example, everybody has seen Go Mechanic, last 3-4 days, right? These are the biggest funds in the world, right? We're talking, Tiger was talking to them to give them $1 billion valuation, right? Well, I mean, how come, right? How difficult is it to open a piece of paper, see, go through due diligence, right? Nobody did it, unfortunately, right? People buy the idea of the story. They always think, okay, there is this syndrome that, okay, that person before me would have done his diligence. The person before me, and unfortunately, it goes, back all the way to the first person, right? Think, okay, this guy is there, Sequoia is there, okay, must be good. Tiger is there, must be great, right? Similarly, and that comes down all the way. TCA is there, okay, gives validation to somebody, right? Who has actually gone and checked through the revenues, checked through the numbers? Does this make sense? Nobody knows who has done that, right? So you need to keep in mind a lot of different things before you go into that market and kind of have those conversations. Sorry, a long-winded answer to your question.
Yeah, my name is Bhargav. I'm CEO of Tables. What we build is a product that helps customers to simplify their operations on the cloud. So headline is we dramatically simplify DevOps. So that's what we build. Now,
Can you explain the product? What is it exactly? What does it do?
basically, people build on cloud, like what Cloud Kitchen is building, and we help them to operate and manage better.
Okay.
In terms of cost, in terms of improving their productivity, etc. Right? So I have three questions. One, two leading questions from the other gentlemen. And the first question I have is, how much do you typically invest at what percent? Right, that's question number one. And the second leading question of this, right? So how do you see what is a seed fund, what is Series A? Like what we understand, at least I understand is seed fund is like you have a kind of get close to MVP from 0 to 1, and Series A is to scale, etc. Right? And the third question, which the leading question.
Maybe you want to, let's answer these two and then you can do three. I have to now remember.
Yeah, I think you answer this. He's more experienced.
So again, what was your first question?
So how much?
For how much? I think as little as 60-70 lakhs. I think as much as $1 million, right? I mean, somewhere in that range, people will fund. $1 million is, the exception to the story. I think the average will land somewhere between 2 crores and 3 crores, right? That is what an angel network will pull in, right? The second question about, and there is no logic of percentage. See, this is not a, this is not a, Y Combinator safe note where I'll put you, X amount at X percentage or, whatever 100x.vc does or something. This is not that. This is a conversation. We'll have to find that, the sweet spot, right? What valuation works for us, or, I think a lot of times you can push people into a convertible as well, right? You can say, I don't know the answer. I also don't know the answer because you don't have enough, traction or revenue or whatever. We'll defer the question into your next round, right? That's also a fair point to sell to your investor. I don't think today people are a little iffy about convertibles because of certain issues in terms of actual conversions. If you don't raise your next round, what happens to your angel investment, right? So those questions, because like I said, everything is a cycle, right? People have tried convertibles. There used to be a point where there were only convertibles that were happening. Everybody would say convertible 20%, 30%, whatever percent discount. And then what happened was a lot of times people did not raise their next round in time, the 24-month or 36-month timeline that was given, right? And then all hell breaks loose, right? Because then it says, okay, how do you find your valuation? Because then you have to bring a valuer into the equation, right? My valuer, your valuer, everybody has one opinion, right? So and there are legal ways to control for that, but even then, right, it's people are not happy with the direction. Rather than saying, okay, I know I'm putting in 2 crores and I'm getting 20%. So it's again a cycle, right? People are now today more comfortable saying I want to value the company. There was a period, I think 2-3 years back, when people were like completely okay with convertibles across the board. Your second question.
Second question is, how do you say, like,
seed and Series A. There really isn't it's all nomenclature, right? It's all just what you want to call it, right? I've seen, seed 1, seed 2, seed 3, pre-series A, pre-series A1, call it whatever, right? It's just, just logically it fits into certain buckets, that's all, right? See, your first investment is your seed investment, right? Series A is, more, idea has come, customer validation has come, proof of concept, everything, there has been acceptance with a set of people, and you're generating a decent amount of revenue. So Series A, I've seen $1.5 million, Series A, I've seen $20 million, right? So honestly, there is no right answer for Series A, right? It's more at the stage that comes in. The majority of the time, what people call Series A in India, I've seen is most likely, a pre-Series A. You raise some money to get you to a Series A. But it's nomenclature. I wouldn't say there is that at this stage, I will call it a Series A, or at this stage I will call it a seed investment. The one again takeaway that I just want to say is, look for non-dilutive equity. Even though I'm coming from wearing the cap of an investor, look for non-dilutive money that is available today. Right? There are so many grants that are available. So many people are coming in and saying, I will give you research projects. Right? CSR is available today. Like, so many people are coming in, and I know our own company has got CSR, right, for COVID and ACT grant and whatnot. People got in a crore of money. One of our companies got $1.5 crore, if I remember correctly. Not completely non-dilutive equity, right? People working in EVs, there are so many different grants that are coming in today for and I'm talking in areas that I know. It's across the board, right? I mean, the BIRACs, and there are tons of. So the first step I would say is don't go into the market looking for an investor, because the minute you get an investor on board, it's a pain, right? You are now answerable. You are now you're now held at literally, you're held at knife point. You're being asked to respond. You're taking ownership for something, right? You're now answerable to somebody who has given you their hard-earned money. You're now taking that, I would call headache, right? So do it at a stage when you are comfortable. Just because the guy sitting to the left and right has taken investment doesn't mean it's right for you, right? The guy, there is always, you have to get to that point where you feel comfortable to take on an investor. I would be much happier if you ran your entire business without raising money also. It's possible, right? As crazy as that sounds, that used to be the way you did business, right? You kind of did it at your own pace. Funding and all that comes in to help you kind of accelerate things, so to say, right? And again, that's also, there's nothing wrong with that, but just be ready. Know that it comes with a whole amount of baggage, right? People are going to call you. They're going to say, quarterly calls, monthly calls, update. There are going to be 10 different things that you have to do. To the extent that in certain companies, I know there are one of the co-founders is like dedicated to just investors, right? And that's resource that is wasted, right? 30-40% of his time goes into answering phone calls. Hey, what happened? Why didn't this report come on time? What happened to the MIS? What is this line on the statement? You didn't explain it, right? It's not required, right? So get to that point where you are confident of yourself, and don't let the investor, again, right? This is, it's a very finely balanced equation, right? You have to, be clear. Don't let the investor also come in and drive the story, right? It is your story. Investor should come and help you fuel it, right? There are many cases where the investor will come and say, okay, they think this is my company now. I'm the big investor. I'm the big dada in the story, and and unfortunately, the way a lot of these contracts are drafted, you might have to. I've seen, shareholder agreements and your reserve matters and all, where you can't take the next step without telling the investor, right? Reserve matters are that restrictive, right? So balance. There was a third question.
Yeah, the leading question from I've been talking to a few VCs, and one of the feedback that the VC gave me was, this is for the seed funding. Okay. Are you looking for fly companies with small companies in sort of a fly kind of model or an elephant kind of model? It's not very clear from your customer list, because I do have kind of both sides of customer. So your business plan is not clear, so you're not investing at this point. That was the reaction for a seed funding. So I was like, taken aback. Hey, why do you look for? Not that they should not look for a business plan, but that was not clear as what they are looking for, what the investors are looking for from a business plan. I have a different strategy. At this point, we are also seeing MVP, etc. Right? So that's where we are not very clear as how do I take this forward. Right?
This is seed funding from VC, yeah?
VC, yes.
I mean, if you're not
Can you name-
curious, what kind of amount you talking about?
We are looking for $2 million.
Dollars.
$2 million.
Okay.
So this is for seed funding. I mean, I didn't have an answer. I mean, even still.
I didn't get the question. They're saying it's a small business or a big business, is it?
So-
Fly or elephant
my-
means what actually?
Elephant in the sense of the big customers, then enterprise customers, fly in terms of startups.
Okay.
So we kind of have a spread of both set of companies, and our business plan is not clear where we are addressing the market.
No, but are you clear what you want to do?
Yeah, we are very clear on that. So we try to explain them, but they are saying, we are not at this point. We are,
Now, what do you want to do? Do you want to do with the small or the big ones, or a combination of both?
at this point, combination of both. So we are doing combination of both at this point.
Okay. So they're saying that's not okay with them.
That's not okay.
I don't have an answer. I mean, if that is their preference, how would you address it?
See, seed stage, again, you have not raised any money before this?
No.
Okay, and you have revenues?
Yeah, we do have revenues.
Okay, like order.
Bootstrap basically. So we help. We have a product. On top of product, we do services. We are doing.
Okay. I think the other, help or the idea, if you are facing pushback, again, I don't know your specific case, is the ask, right? You should, there is always a sweet spot for, whether you ask for 500,000 or you ask for 2 million, right? I've seen, same deck can be repurposed and say, I want 500,000. Same deck you say in the, you just change the page and, change the structure of it and say, okay, I want now 2.5 million, right? So the question in an investor's mind will be, okay, if I give him 2 million, does he have the ability to actively use it, right, in a meaningful way? And is he able to appropriate the funds in a meaningful way, right? That's always the question, right? And that might not be apparent to an investor, is what it looks like, right? So, maybe you should tone down the ask, right? Maybe you should ask for 750K, right? And see how that goes, right? Because again, with investors also, it is, you want to see progress, you want to see how this kind of stages up, right? Where I've seen in India, right, where I've seen people raise $3 million, $5 million at seed stages when you come from pedigree, right? Very new in India, has not happened before, but today I'm starting to see, like in the last year and a half, 2 years, I've seen people opening bid as like, okay, $3 million at like a, $12 million, $15 million valuation, right?
So at what stage is this?
Seed, idea stage, napkin, right? Today I'm seeing, this is like very Silicon Valley story, right? In India today I'm seeing, but that comes from people who have been there, done that. They have some pedigree behind them, right? They have I've sold 2 startups before this. Okay, Blinda, okay, I'll fund this guy, right? I know he knows how to do this. He's been through the grind. New idea, okay, I'm willing to fund it. In India, it's just happening. So if you raise $2 million seed stage, you are the exception, my friend, and I will definitely, it would be something to be appreciated, so to say. It is a little harder in India to do that. I'm not saying it can't be done again, but I would, if you are facing pushback, then it means probably cut down on your fund ask and see how that goes, right? I think that would be the way to look at it.
Hi, I'm Pragyan. My company is IITMIC Technologies. We are into developing technology to see buried objects and hidden objects. So my question is about how the investor looks at exit and what are the red flags we should see when we see a term sheet.
I'll just quickly say something. Might be different from the market, but it's at the stage you're talking to me. I don't look at exit. Right? Darshan will say something different, but I don't. Right? Because it's just too much of a black box for me to tell you. Okay, people will say, okay, I want a slide on the deck for exit. Right? There is only 2 answers: strategic buyout, IPO. What else can you answer? Right? There is literally no other answer that you have. So it's very hard to judge all that, right? See, the point I'll come back to is that I'm looking to back, the idea is that back passionate, perseverant entrepreneurs, right? I think those are the only things that I can control for, right? With obviously, after I'm convinced about the tech, right? The next 2 things I will look at is that, right? Exit, all that, really hard to say.
See, term sheet is a pretty standard thing. I'm sure you should have a good legal guide to advise you, but what kind of things you can accept. You can't dictate terms like a very big company which is getting into an acquisition or something like that, but there are certain conditions which definitely people would put in terms of the various things they would like to be informed and all that. So I don't think that should be a major worry, but I would also like to say that exit is something which will be too much of guesswork at this particular stage, and I think people who are willing to support your idea, they may not insist on that. They would like to see that you prosper and you become bigger and like that.
But they do mention it in the term sheet.
Yeah, I think like he says, there are some standard things you should say. IPO, strategic, blah blah blah. Nobody knows.
He's saying term sheet. He's saying term sheet. Yeah, that is something. See, those are all legal constraints. Right? Those are all things that you put in. See, you understand that you have to understand where the money is coming from. Right? When you are looking for an investment, right? It is a black box, right? It is, we're looking at like 3-4 things and saying, okay, here is 3 crores, here is 5 crores, right? The minute you're doing that, now the person starts thinking, okay, what happens if this guy disappears? What happens if this guy loses interest halfway through? Out of 3 people, if one of the core tech guys says, okay, somebody is not well at home, I'm going. What happens? Right? There are just so many variables that can't be controlled for. So these are all things to control for that. Exit is a clause that is there to control for that. Is to say, okay, tomorrow you can't just pack up and leave. You are now constrained to giving me an exit. Can I enforce that? Can I tell you, okay, give me 25% IRR, which is what you are referring to? No. What can I can come after your assets maybe. If there isn't any, what will I do? Versus, I'm saying, if you had that 5 crore in the first place, you would have done it yourself, right? You're coming to somebody to, again, I'm not making a personal comment here, okay? So I'm just saying versus how an investor will think about it, right? So the idea is that these are all things that you put in place to ensure that the entrepreneur behaves, right? Doesn't go berserk with the money, doesn't go, has some, blinders, to control for how you operate in the company. And the exit clauses, I think it is just that. It is an understanding that you have an investor who is time bound, right? Do you understand that? That's all that clause is trying to control for. I wouldn't take it in any other way. People are normally stuck up on that clause. 20% shall we put 20 or shall we put 25 and all that? I don't, honestly don't care. So.
There are other 2 questions, a few of the entrepreneurs have come. I'm putting it forward to you because I've answered them. Now they want to hear it from you also. When is the right time for a person to come for an angel fund? When is the right time? And is it hard rule that a single entrepreneur will not be funded? What is the logic behind an entrepreneur? Investors not funding a single entrepreneur? And what is the percent of dilution that is required when they approach an investor? These are the questions which they ask.
So I will give you my answer, then Manu can add to it. When I think we already talked about it, it should be at a stage when you can say the concept will work. There is some proof of concept. It's not a simple idea which should be funded. Of course, there are exceptions, as Manu said, but very rarely I think it's going to be possible that you must come and prove that this is working. There are some customers, maybe you don't have revenue, but still you can try this. The second one is Solo founder, I think yes. Like you said, what happens, the solo founder loses interest. Or many times the doubt is whether the person has got the bandwidth. See, you don't have a person to question, counter, right? If 2 people are there, they'll talk to each other, they'll question. At that stage, you have a lot of issues. How much can one person handle? It can be market related, product related, anything. So you feel very safe in a presentation. There are 2 guys sitting and both are talking and they can answer different type of questions which we ask. Then we feel better, The third one is
about how much of equity?
There's no hard and fast rule. Like it says, as they say in business school, there's no right or wrong answers here. But it will not be a huge amount. it will be a very small percentage only, that stage. That's the stage you should come also, right? Maybe your valuation is 15, 20 crores and then you take 1 crore, 2 crores like that, maximum, like that.
I think that's...
Yeah.
Can I ask one more question?
Yeah, please.
Thank you. See, in the composition in the pitch, right, when we put salaries as a major component, which basically the human resources what developing the whole product, right? I was given to understand that that doesn't go well with the investors. They see salaries as not a major component and they would want to take the risk of this. Is it true?
Is it all subjective? If you are in software business or something like that, right, where the entire thing has to come from people, obviously salaries will be a major portion of the P&L or whatever you are going to show. And if you are not paid them, then the investor will be very suspicious whether you can actually get good talent to execute the project, depending on its technology kind of a things. So I don't think there is any...
Time and again this was brought to us.
Your product is what you said? Your product is?
Manufacturing.
Yeah.
But
No, I'll just...
followed a different model of making OPEX.
The manufacturing.
So-
I'll just make one point. I think founder salaries will be questioned.
Probably.
Okay, not the broader salaries, no. Founder salary, if out of 3 crores, me and my co-founder are taking 1.5 crores, he'll probably question it. I'm just saying as an example, right? Founder salaries are generally expected to be capped until, and as you raise a Series A and Series B, a lot of times one of the things you can do, and this is very generic advice, is that say you are underpaying yourself, your market salary is, let's say, 25 lakhs, right? A lot of times, again, and I'm not sure investors will, I'm telling you things probably, so you can say, hey, I'm underpaying myself, but I'll catch up, once a Series A comes in or a Series B comes in, I'll catch up. My defined salary is this, but I'll pay myself only, much smaller amount. So when we do come to a stage where this is not going to be a hit on the company, I will take it back, right? But there might not be investors who will be, agreeable to that, but they'll say, keep it at 50K or keep it at 35K or whatever. And as a Series A comes in, you actually increment it, right? So generally, founder salary is the only number that I would look at, right? As a matter of, because this is not your reward comes from equity. Your reward does not come from paying yourself a salary, right? So that piece must be clear in the mind of a entrepreneur, right? At least not at the seed stage. You can't say I'll pay myself what I was getting in a, TCS or whatever, right? So manufacturing is specifically salary.
Yeah, but you're manufacturing what you said?
Caravans.
Caravans. Okay.
So you're fed up with your OEM. So
Okay, sure.
you want to go along with the OEM.
But I don't know, in manufacturing situation, you must be able to justify why you need so many people, and people who judge this should be able to figure out, right? I mean, you need a certain number of people to make certain products. Yeah.
Our model is such that we converted a CapEx model into a 100% OpEx model,
Yeah.
where we are outsourcing right from manufacturing to sales. The whole thing is outsourced. So
Then your salary should be low, no?
yeah, major component is only the salary of a team. It's not a team. So when we say then
Okay.
you don't need money on various aspects of your salary, so people see. So that's what I can ask.
Yeah.
Is it a generic?
No, I don't think so. No, I don't think. No, I don't think so. I think every item will be scrutinized when people do due diligence to see whether it is being spent properly, right? There is no such rule as salary should be low and all that.
So I hope this is. You have one more question. Please, we'll take the last question.
Thank you. I'm Karthik from a company called Spirulum Solutions. So we are into 3D imaging related IP content is what we are doing. And my question is, how is the valuation process adopted at Chennai Angels? That is one question. And second is, for the typical investment, I understand that there are a few set of people for every investment. Am I right? Or
Yeah, correct.
Okay.
Correct. It's a pooling of investment by
Okay.
10, 15, 20 maybe. let's say we have you get 3 crores you raise, it could be 20 people, some going down to 5 lakhs, some investing 25 lakhs, and that's how it goes.
So that would be individual exit that they can have or later on.
We actually become one investor as a Chennai Angels investor, and I think the exit is normally together. I don't think
Normally
any individual can exit whenever he wants, but very rarely
We can, but
yeah.
generally not.
Yeah.
They are still involved in the continuation process. Yeah, okay. And then with respect to the valuation, is there a what is the method you adopt at Chennai?
There is no method. There is no method that is specific to Chennai Angels, or there is no method. It's a generic way, you know. How do you pitch it? At what stage do you have traction? Do you have customer? Do you have a POC? Do you have core tech? Is there a, is there pedigree? Valuation is a very, very, it's subjective, right? It's subject to so many different things, and that's where, like I said earlier, when you are not able to find the common ground, you say, okay, we'll do a convertible on certain metrics. And the thing about convertible is it doesn't have to be a pure play, discount, right? You can do a lot of things around convertibles. Convertibles are a fairly beautiful instrument that way, right? You can put a floor and cap to it. You can tie it to a particular metric. You can say, okay, if you hit a particular revenue, I will give you a multiple of that. Or just say, if you hit a particular revenue, I will give you a, absolute valuation. Right, you can tie it to multiple things. You can say, okay, if you get that customer that you have been promising me in your business plan, right, this huge big customer who's going to come in, but he's, now like he's coming tomorrow, he's not here today, right? It never happens tomorrow usually. So we'll say, okay, if you get that customer and he comes to you with an order and you start billing him, okay, I will give you this valuation, but if not, this valuation. So it can be anything. And the convertible, beauty of the convertible is that you can put anything as a condition to convert.
Entrepreneurs, thank you for attending this session. Thank you, Manu. Thank you, Ramkumar, for coming in. We, like Manu said, we are here. Chennai Angels Secretariat sits in the A block, 3rd floor. You people can approach us.
Feel free to drop in, just have a conversation.
Thank you.
Thanks.